Your Money, brought to you by the Welch Group.
So health insurance premiums for some Americans have been subsidized in recent years because of the Affordable Care Act.
This week, we discuss a potential major change to those subsidies in 2026 with financial expert Jay McGowan from the Welch Group.
All right, so Jay, let's talk a little bit about the impact that could happen for people who have their premiums subsidized currently under the Affordable Care Act. What kind of things do they need to know about some of these changes?
Yeah, so there's a big change coming up, and we use this for a big planning tool for a lot of our clients. So this segment is really focused on people that obtain their health insurance through the Affordable Care Act. So a lot of people watching this, if you're on Medicare over age 65, or if you have your health insurance provided by your employer, this may not apply to you, but it may in the future, depending on kind of how things, if you retire early, if you start a job with an employer that does not provide health insurance, this could pertain to you. So the Affordable Care Act came into being. It allowed people to have access to health insurance that didn't have pre-existing condition clauses. So anybody could obtain health insurance no matter what was going on with their health. The big thing was the subsidy that it provided. So it provided a subsidy. It was based on it is based on your income. So depending on how much income you make, you can get help on your insurance premiums. Okay, so that's really the big thing I want to talk about today, because there's a big change coming up. So during COVID or after COVID, as a part of that relief, they came out and basically said that nobody that receives health insurance through the healthcare exchange will pay more than 8.5% of their income in premiums. So that's based on a silver benchmark plan. There's some things involved with that, but basically you had a cap on how much you were going to pay for your health insurance. So unless Congress acts in 2026, so here in a couple months, it's set to revert back to the old ways, where now it's based on the federal poverty level limits.
Oh, wow.
So I think the best way to illustrate this is to give an example, because this is a really big deal. If you're using this as a planning tool, if you're retired before 65 and you're not on Medicare yet and you're using this, we use this with a lot of our clients, you need to really be aware of this, because it can cost you a lot of money. Okay. So for example, I looked at a married couple, 60 years old, in Madison County, Alabama. Okay. And let's just assume that their income on the year is $84,000 for the year.
Okay. For the household.
For the household, for those two people. No dependents in the house. They're on health insurance, just the two of them.
Yeah.
In 2025, based on the current rules, you would get a $1,900 per month subsidy on your health insurance. So it's saving you over $20,000 a year. Yeah. Okay, fast forward to 2026, at $84,000 of income, you would still receive about an $1,800 a month subsidy. Okay. So no big deal right there, okay? Yeah. Now let's run another example. Let's say you make $85,000 as a couple. So you only go up $1,000 in income. This year, your subsidy would be $1,800, $1,900 a month. Next year, unless something changes, zero.
Wow.
So $1,000 of additional income will cost people potentially over $20,000 or more, depending on how many people you have in your family, in health insurance costs. So what's the point of this? And we'll talk about this a little bit next time, but if you can kind of control and manage your taxable income, which accounts do I pull money from if I need it? When do I trigger capital gains? All that stuff. You really need to be cognizant. If you're in this situation, you receive health insurance through the marketplace, going into 2026, unless something changes, you have to be really cognizant of the amount of income, because you really don't want to fall off that cliff and get no help with your health insurance.
Absolutely. All right, so we'll talk a little bit more about, even just wealth management in general, but specifically also about this too. So, Jay, appreciate you taking the time again, my friend.
Absolutely. Thank you, sir.
Yes, sir. So if you want more of your money tips, you can go to our website, waff.com, or watch us here every Tuesday at 4 p.m.